Hello and welcome back. So today I got a couple stocks. They're actually two different stocks that are basically REITs and they're healthcare related. So if you're into healthcare, you're into stocks, you want a good return and you want some stable stocks, stay tuned. I'm going to show you what that's all about. All right, so just try to keep things informal. I actually have it up on my screen in front of me. I'm going to go through them and then I'll go ahead and give you kind of a screen share and show you some of the charts and things and why I recommend them. But go ahead and stay tuned and I'm going to kind of walk you through both of these stocks. And really quickly, if anyone can please subscribe and help me out. I'm just trying to grow my channel. I have about, I have less than 100 subscribers right now, but I have about 40 or 50 videos. I do 2 a week. Please hit the subscribe button if you like what you see and it'll help me out. All right, so the first one is actually Ventas, V-E-N-T-A-S. It's VTR is the stock symbol, VTR. I'll go ahead and post it up here. And again, this is a REIT. It basically has a 5.01, somewhere in that range dividend right now. So that's going to be a 5% dividend. And as you know, if you don't know anything about REITs or real estate investment funds, basically, I do have a video which I can post. Actually, I'll put it in the description, but I actually have a little bit better description of what they are in there. So go ahead and take a look at that video. All right, so just to kind of keep this simple, Ventas is a healthcare real estate investment trust. So it's a REIT, just like we had mentioned before. It invests in properties located in the United States, Canada, and the United Kingdom. So those three different areas. And it is one of the largest healthcare REITs in America. So it is a pretty big stock, and I'll go through that in a second on a couple screen shares. But it has around 1,200 properties. So basically, it does have a lot of different properties it invests in. And this one actually has, it says 55% of its operating income comes from senior housing. So that's only going to probably go up in the future. So it's probably a good investment there. I mean, as far as it not coming back down, it's going to be a good investment with the way that the healthcare is going and the baby boomers are actually getting a lot older. It does 19% office, like medical offices. And then it says 6% hospitals and then 7% life science. And then there's the rest of them at 7% acute hospitals. So another thing about this stock, VTR, is basically went public in 1999 and it has had uninterrupted dividend since going public in 1999. So every year, and it's basically increased its dividend by about 8% per year. Obviously, that's 8% of the dividend at 8% every year, but it's basically a pretty big increase every year. And that's going back almost, almost 20 years now. So it definitely does have that history, and I'll go ahead and show you that in a second. But it basically, a long term, you can expect around a 5 to 6%, somewhere in that range, dividend per year, plus the cost of the stock going up. Alrighty, so here's the first one. It's Ventas Inc., and it's basically spelled V-E-N-T-A-S, Inc. It's VTR in the New York Stock Exchange. $63 and some change is the actual stock quote. This is for the day today, but you can see down here it's got a 5.01 dividend yield that it's going to pay out there, and its low for the 52-week is 46. Its high is 65. The reason I like this stock a lot is if you look at like the year to date. I'm going to go through a couple of these different things, but if I click on the year to date, it was at 58. It's around went up to about 66. You can go out to, the max here. And as you see, basically, as it said before, around 1999, it's actually, it did a little bit things before that, but it actually has gone on a steady increase. Here's the dip in 2008 when everything kind of crashed, and it's come up pretty strong. So as you can see, it's got pretty good returns over that time. It's obviously it goes through some of these low periods and comes back up every so often, and we can look into why that's happening. That's for a different video. But as of right now, you can expect that to keep doing that, but it slowly is increasing. Which is which is a positive. Over the last few years, though, obviously it hasn't been increasing as much as it was from 2002 to 2014. The other thing about this stock, if we go in here, is again, this is their website, Ventas, and you can actually see they really like to push some of their stuff here. It says 23% compound annual total return on the stock. So it says, let me see, since 2000, our compound annual total shareholder return was 23%, far outpaced the S&P 500, and delivered a total return of 4,835%, which is crazy. That's a good stock. Obviously, the past has no bearing on the future. Keep that in mind. And it does as we go over here really quickly, it does say, there's the 8% compound annual dividend. So the dividends are increasing it by about 8% of their total. So anyways, you can go in here, you can see what they invest in: senior housing, health systems, post-acute care, medical office buildings, and science centers. So basically, look at this. Here's the website, and the website is ventasreit.com, and go ahead and check that one out. All right, so the second one that I actually recommend is going to be the National Health Investors. It's basically going to be the second stock. It's a NHI. is the symbol, so NHI, and that's basically another healthcare REIT again. And REIT is again REIT, and I have a video which I'll have in the description that describes REITs a little bit better. I go ahead and kind of describe more traditional REIT, like the symbol on that one's O, but I'll go ahead, and that's in a different video. So stay tuned for that if you want to watch that. But this one's actually pretty straightforward again. This one actually has a little bit higher dividend at about 5.4%. And that's typical of, REITs usually have a bigger dividend just because they have to give about 90 to 95% of their total income profits back to the dividend investors. So that's always something that you always have to expect is fairly good dividends. Then you're not going to see them really low. So, and again, this second REIT is NHI, and it basically, I'll read it kind of here. It is engaged in the ownership of financing of healthcare properties such as assisted living facilities, senior living campuses, skilled nursing facilities, specialty hospitals, and entrance fee communities and medical office buildings. So again, it's all basically healthcare related, real estate that you're investing in. It does have over 200 properties, so it's a little bit smaller than the one that I had mentioned before that had around 1,200 properties. Sometimes these can give a little bit better dividends if they do well, or they can go a little worse if they do worse when they don't have as many properties. Again, it depends on the size of the properties, but I think this is a little bit smaller organization. It does have approximately 60% of our senior housing properties in this one, and again, that's a little bit higher than the last one, but not by much. So, and again, are those going away? I don't think so. So it's probably a good choice for this stock. And again, this one has, the other one had about 8% a year of dividend growth. 8% is growing on its dividend. Again, it's a 5 or 6% dividend, and then, you have to take basically 8% of that, which is less than 1%, but you're growing that every year. This one here is about 6.5 annual dividend growth, so it's a little bit less than the last one. But again, it does have a higher dividend to start with, so keep that in mind as well. Basically, it does say that, in fact, the 75-year-old population is expected to double over the next, 20, 25 years, somewhere in that range. So this is going to be two different companies that are actually really good to invest in. And I'm going to go ahead and show you what the NHI is all about here in a second and why I might invest in it. And, we'll go from there. All right, so the second stock that I actually like is going to be NHI, or National Health Investors, Inc., NHI. It's a 78.21, the quote right now. And this one carries a little bit higher dividend at 5.37%. Obviously, this can change. This is when I'm looking at it right now. It's going to fluctuate all the time. This year, it's had a 52-week high of 84 and a 52-week low of 65. So it has fluctuated quite a bit this year. And this is, this one, just like the other one as well. These are going to, they have up years, they have down years, but over time, they actually do keep going up. It just depends on, obviously, these are not maybe going to be super short-term investments. Anyways, if you look at the max on this one as well, you can see almost the same pattern. I mean, basically down here, year 2000, it was down around $6.31, and it's considerably, gone up very consistently since then, up to about $78.99. And you can see that kind of upward trend. Again, it has some kind of fins in here where you have low troughs and coming back up. In 2008, 2009, it didn't look like it actually dropped that much in here. Maybe right here it did at the end of December, but it wasn't as much as the other one. So go ahead and check this out. It's 5.37%. And if you go into here, here's their website. And again, the same kind of a thing that they're going to be pushing their investor relations to people as far as what they can do for them. They have 232 properties right now. They have 35 operating partners. And the 10-year total return has been 390% over 10 years. So, try to beat that on certain stocks, or even just with a dividend and not having your stock go up. You can see that these things have been fairly successful, obviously, over the years. But I cannot state it enough that just because it's done that in the past has no bearing on the future. All right, so really quickly, the reason I like these stocks are they're basically healthcare, and healthcare is not really going to be going away anytime soon. In fact, like you said before, the population is going to basically be doubling in the next 20 or 30 years as far as, people that are about 70 years old. So this isn't going anywhere. The healthcare is only going to go up. We're going to need more and more of these facilities. These are companies that are basically investing in that real estate and expanding on it. So these are companies that are usually pretty safe. Again, you have to do your own research. I don't recommend any stocks to anyone, as I always say, because I don't want to get in too much trouble when it goes down. But it does. These are things that you can definitely do your own research on, and at least I'm kind of notifying you of what's out there. And these are pretty good stocks to take a look at and dig into them and see what you like about them. Again, you get that dividend, and also in these cases, you're not just getting dividends dividend growth because they're about 5 to 6%, but you're also getting an uptick. Anyways, I'm going to be doing a little bit more of these videos like this where I actually pick some stocks out just to let you guys know that they're out there. A lot of times, especially me, when I was kind of growing up, I never knew stocks existed until someone else told me about them. I mean, you can obviously go and do your own research, and I recommend doing them after you watch these. But at least I'm just going to kind of show you guys what's out there, what the track record's been, and things like that. So it might help you, it might not. Just we'll see what it does. But at least you're getting the knowledge, and you're looking at your finances and doing something about them. And just really quickly about my channel, I actually do tech and I do financial reviews. So I do tech and money. I call it Tech and Money channel. You need money to buy tech, and I kind of do a whole bunch of different things, especially Apple type products. In any case, go ahead and subscribe if you're interested in those two topics, and I'll keep making these videos for you.